Right, let's jump into things. Where are we at? 30th of April, last day of the month, and 9:56 a.m. So a little bit earlier this morning. Actually been off dropping off the car after some moron sort of bumped into me, but gets me out of the house a bit earlier and gets the day going. So look, I'll start off with the news just because obviously sort of hour and a half or so now we've got CPI coming up for Aussie dollar, and it's a bit of a mixed bag with these bits of data here. But look, your trimmed mean quarter on quarter is looking to sort of tick up a little bit. Your normal sort of little headline quarter on quarter. It's called the headline quarter on quarter, but that's also looking to jump up. Actually, a fairly decent sort of jump up over here. But the year on year looking to come down. So for some reason, the Forex Factory sort of website here with the data doesn't give the year on year trimmed number, which I think is a year-on-year trimmed number, and which is a little bit higher, which is the one that sort of they seem to tout a little bit more as well. But look, we'll be working off the main sort of headline number here at 2.3%, coming down from 2.4%. So I mean, everybody kind of knows how this works with the CPI and that, but obviously a weaker, cooler CPI means that of the dual mandate, the two sort of things that they're sort of looking at, inflation, obviously in this case being one of them, is not as prevalent. And if it's not as prevalent, then that means that you don't need to keep the rates as high for as long, or when going back a couple of months when they were putting them up. But in this case, at the moment, they're not looking to put them up. They're just looking to whether they're going to hold them or drop them. If it comes in cooler, that's a big tick in the camp of, okay, well, in terms of just specifically that part of the dual mandate, the looking at the inflation, that's something that they can actually look to reduce the rates on, because inflation is not really sort of something that they need to sort of pull their lever in which is basically euphemism for holding the rates higher. So if this comes in cooler, it's going to be a bit of a sort of downward pressure on the Aussie, and obviously sort of like with these other sort of figures coming in a little bit sort of inverse to sort of what they're expecting on the yearly, it could be a little bit of a mixed bag sort of thing. As I said, look, I think sort of RBA and what they're going to do is really going to be taking a bit of a backseat to what happens with the US dollar as a whole anyway. So it'll just either sort of amplify or mute the sort of movement there. But if we sort of look at these things in combination, so say we get US dollar running and then we get a cool CPI, that could really put some pressure on Aussie. That's the sort of setup and scenario to sort of get Aussie sort of moving down a little bit. It did obviously, I'll cover the chart in a moment, but it did have a bit of a breakout attempt yesterday and got smacked on the nose straight away. So it is in a little bit of caution mode, but really back into the range. So this could be the one that sort of gives us a bit more direction. Coming out at the same time, we've also got PMIs coming out of China. Again, sort of, Aussie very sort of touchy when it comes to sort of China and China data and the sort of health of their economy. So above 50, like with all the PMIs and that, is expansion. Below 50 is a contraction. You're looking for slight pullbacks here in the manufacturing and a slight pullback here in non-manufacturing. So these kind of numbers coming in, again, if it's going to be putting a little ticker across on Aussie, a weaker number here is not going to be conducive for a sort of a move up with Aussie. So we've got main sort of headline here looking a little bit weaker. We got China data looking a little bit weaker, and we potentially have US dollar coming off its lows. It's not really there yet. As I said, I'll cover the charts in a moment. But as far as these two bits of data here go, they are looking like it's a little bit of a sort of a handbrake for the Aussie to be moving up at this stage. Moving forward, we've got a bit more. We've got Caxton manufacturing. That's also looking to sort of come down. And then sort of through the rest of the session, Asia at least, we don't really have too much. We've got German CPI coming out month on month. So only month on month. That's interesting. Holding flat pretty much. So whether that sort of impacts the euro too much or not, we'll have to sort of wait and see. Of course, sort of euro looking very susceptible to a bit of a sort of cooling breakdown at the moment as well. Obviously, pretty much inverse to the US dollar and DXY. Just on that as well, cover just a little bit of the data just from overnight because we did have jolts and consumer confidence come in this morning. As I said, sort of with yesterday's video, look, these were expected to come down. These are actually numbers were revised, so we revised down a little bit, and then so basically it would have come in flat. Had it come in expectation, but it did actually cool off there a little bit as well. So, yes, we also had trade balance numbers, and they also came in weaker. So again, look, these are sort of ticks and crosses for, well, they're not ticks in this case. They're crosses just in the sort of camp of any sort of US dollar rally based on fundamentals. So fundamentally, look, trade balance is down. That's not conducive for a sort of strong US dollar. Job openings, you're not advertising jobs when you're feeling good about the economy. I mean, sorry, you are advertising jobs when you are feeling good about the economy. When you're not, well, you see your lower job openings. That's because people are sort of a little bit cautious, a little bit worried, a little bit sort of skeptical about what may be coming. And you can also see that reflected in the consumer confidence. So this is actually revised up slightly, but regardless of it all, it was expected to slow down and to slow down even further from what we saw. Sorry, what the expectations were. So you've got 1, 2, 3 ticks for crosses for US dollar strength there. So it's trying to get off its lows. Certainly, I'll cover the chart in a second because it's important in my opinion to sort of look at how these bits of data coming out. Now, the way that you sort of apply this kind of sort of stuff is really, this is across and across and across in terms of, strength or well, positive or negative for US dollar strength. Now, if you get 3 bits of data coming out and the market reacts in a certain way around this, like, I mean, it should drop off. It did drop off. It didn't break down lower. And the reaction with these was very much knee-jerk reaction. Banks sold off, as we expected, but then it bought straight back up. And I think that's important to pay attention to these little nuances because very much with data, when you're trading data and releases and this kind of stuff, you get the knee-jerk, there's a couple of parts to it. You get the knee-jerk reaction, which goes in line with what the data is here. So, we were expecting this, came in lower. That's negative, your sells off. If even with those bits of information presented to the market, they still buy it up, means that the market could use these 3 things as any excuse to continue running it down, but they didn't. They bought it up instead. And I think that's important to pay attention to because it's like when you see bits of data come out, if like one of the biggest bullish sort of things you'll see, or bearish, whatever, reversal indicators is when you see a bit of data come out, market moves down, but then it comes up and it takes out what I call the data drop point and goes up inverse to that. And those times you'll see quite a substantial move to the other side. So look, I mean, it hasn't broken out or done anything sort of really off the lows as of yet, but it's certainly something that I'm keeping a close eye on. Moving on, so that was US data week overnight. We got Aussie, China coming out here. Both of these looking a little bit weak for Aussie. CPI looking flat over there with the euro. Coming out tonight, we've got GDP out of there. We got ADP for the US. Again, a bit of a tick in. Oh, sorry, a bit of a cross in this case for any potential US dollar strength here. Goes in line with probably job openings and this kind of stuff here as well. Moving on after this, we got GDP looking like a massive sort of drop off here, quarter on quarter. I mean, maybe this is to do with sort of the tariff sort of stuff. I don't know. GDP, I mean, advanced GDP. GDP should obviously be the sort of production that they're doing. So you'd be wanting that to be moving in a bit more of a sort of positive sort of direction. And then, of course, we got Chicago PMIs looking weak. You got core PCE, so that's also looking to come in a little bit weaker here as well. Now, the reason I've sort of opened this one up here is because the Fed have said, or sort of Powell said, that basically, PCE is what they look at. I mean, realistically, the market loves touting CPI, but PCE is what they've said is their sort of preferred method or use of it. So this could be something to keep an eye on. I think the Fed is pretty much sort of like pretty heavily in the camp of potentially sort of just holding this next Fed meeting. Of course, nothing's ever sort of guaranteed, but certainly, I mean, this coming in weaker here, I mean, PCE is basically almost sort of like a CPI kind of thing. Difference from CPI only measures goods and services targets consumer by individuals. I don't actually know what the difference with that is because I mean, CPI is obviously the people at the grocery store kind of sort of stuff. So that's your individuals there. But yeah, and that's just what I said. CPI takes most of the attention. Uh, yeah, I mean, look, it's very similar to CPI, but for some reason they're saying that they look at this a little bit more. However, look, month on month with this is obviously looking to tick down. So a tick down there again is more of a reason for the Fed to be a bit more dovish because inflation's not a thing. So you've got a bunch of negative looking, everything's working against the US dollar at the moment, really. And look, we've seen it in the chart, it's been selling down, but lower inflation and weak economic data is basically the secret sauce for, hey, look, let's cut and stimulate the economy because inflation's not an issue. So, we've got a little bit of breathing room now and the economy's slowing down. So let's lend them some money. Let's make it easier for people to borrow by cutting rates, stimulate the economy, get these economic data points up, and see what happens to inflation. That's the sort of the gist of it all. So, what I mean, it's not looking at the moment from a from a fundamental point of view, particularly rosy for US dollar. In saying that, I still think we have a bit of a rally coming, but I will get to that in a moment. All right, cool. So that's pretty much data that we're sort of looking at for the day. Let's get on to the fun stuff, the charts. So yesterday, this is pretty much, look, it was respecting the zones, give or take, a couple of points through here. So let me just pop this onto, there we go. So we can see, obviously, sort of this is where we were saying, look, buyers coming in here. We saw the buyers that stepped in over here. This is a pretty strong looking little sort of support area for the moment here. And as I said, sort of like moving up, this is the area that I was watching on yesterday to see if, excuse me, they would sort of bring it up here and then sell it straight back down. And a number of times they tried to hammer it down and hammer it down and hammer it down. And as I said, they're pushing it back up as well. They're not breaking out as of this point. I mean, and because, like all these times where you've got so much chop, you've got so many levels where, hey, we got the sellers, the buyers that were here, they'll be sellers here. You got the next sort of body fill up here, they'll be sellers here. You got the big breakout levels here, they'll be sellers there. So there's so much work for it to be done. As I just said a second ago, all that data doesn't really sort of paint a picture of like, hey, yeah, let's buy US dollar because the economy's looking great. It does put it in the camp of there's a higher chance that, the Fed may cut. And as we know, pretty much cutting is the sort of I'm trying to think of a nice way to say it, but it's the death of a death. The reduction of, let's just say, okay, it's a reduction of a currency, basically, a weakening of a currency, however you want to put it, will be coming from cutting. Hence why there's so much weight on this thing. I mean, there's a lot sort of, behind the scenes to get it to where it is now. But if we look at just the moment as it's going here, you've had, I think sort of here was, I think this actual move down here was to do with uh, the Canadian election results yesterday. That was happening as those results came out there. So as you can see, pretty much came right back down here, closed that gap, and bang, buyers bought back up. Moving through 3 o'clock, I don't think there was too much that I could see around this point here. Yeah, 10 o'clock. I don't think we had data to sort of move these things. Anyway, regardless, these are the last bits of data that I was talking about with the US here. And as you can see, it was sold down, bought straight back up. So you can see how strong the market has really sort of bought this thing up from these points here. I mean, this is where the buyers are definitely sitting, should they have interest. Like it hasn't even sort of got down here and sort of held down here. These buy ups have sort of come straight away. This is obviously would have been another sell down, bang, bought up, sellers bang. So look, it really is a bit of a tussle between the two at the moment. You've got it basically just in a small little range, just on the supports here. But as we sort of said the other day, this is the box that we're kind of playing with. This box inside here, and then of course, you got your sort of swing high confirmation up over here. So I was calling for inverted head and shoulders with a bit of a higher neckline here. Now, inverted head and shoulders can move. They don't have to have perfect necklines. I mean, it's obviously a little bit easier to use sort of to define, and I prefer them generally not too steep an angle. But the theory behind it is still the same. And this is the thing I say with sort of, trying to sort of teach people, or sort of teach, I'm not trying to teach anybody, but when I talk to people, when I tell people about this kind of stuff that are looking to sort of get into it a little bit more, it's one thing to go, okay, yeah, here's a head and shoulders. But you've got to be able to unpack that and actually go, okay, what is that? Why? Yeah, okay, yes, I can see it's, there's a low here, there's a low here, there's a low here. What does it mean? And that's where the sort of like the whole idea of the buyers and the sellers and the tussle that's sort of happening between them really comes in, and it's worth sort of understanding that. And what you want to sort of see through here is the fact that your buyers at a main lot were here, they've stepped up to this lot here, they had a little run up here, and they've failed. That's fine. We can see this move through here. But realistically, this is your big area of buyers here. So this is your sort of like, where's the launch? This is your area where buyers are sitting and lurking at the moment. And as you can see, this is the bigger picture that have moved from down here, they've moved up here. So you did have buyers at this level, they lost it. They moved up here, they haven't continued and moved it down here. And this is why, I mean, I cover this thing all the time. You got to know what leg you're in. So you have first leg down, finds support, finds resistance, comes down, tackles that low, obviously bounced a little bit there, but it broke through down here. Cycle begins again. So this leg now becomes this leg. You move back up, and this time they've actually taken out those highs, so it puts it on notice. Sellers move in there again, find resistance, sellers move in here. So this should be tackling this low for potential continuation, because these lows are still, although they took out this one here, they're still lower than this high over here. So this is the leg that you're in at the moment. So we're trying to determine with US dollar, is this a higher low, which then leads to a tackle of these highs, and then for a potential breakout? Or is this low going to come down here and then sort of give us a bit more of a sort of ugly looking lower sort of area of a range? Or are we going to see a breakthrough? And at the moment, we're just in this pullback phase. This leg hasn't existed yet. It's tried to break out a couple of times, but unable to. So this is why we've sort of got this range built through this area here, and why it's sort of like, it's crucial for it to hold 98.90 or 98.80, whatever, this sort of level through here, because we've seen the buyers down here. We've seen them sort of push up their bid to this level here. You want to see that buyers are still hungry and moving through here. You want to see the next move come like this, should they break out and then come back there, and you can see the progression of the buyers moving up to the top side. That's obviously getting ahead of ourselves a little bit, but the here and now is the fact that they're holding this zone through here. So a little bit of a head and shoulders through here. I'd still like to see it above 140 to really sort of confirm it.
you could say that, okay, the neckline now has sort of come down a little bit because you can see the angle in which the sellers are moving. And you could say above this 100, these kind of levels here, 140 would be still the nice sort of confirmation that you're actually going to get a play out of this inverted head and shoulders. But if we sort of get back down into smaller timeframes here, we can see realistically it's just a little bit of indecision here. So these are where the buyers are sitting. We can see that sellers are moving up. Sellers are trying to roll it over a little bit down here. RSI is not looking like anything too crash hot. Look, with the data coming out today from China, I think that could be the sort of, I mean, obviously for the Aussie, the CPI is going to be the highlight. But in terms of DXY, I don't think it's really, well, Aussie's not part of DXY, but I don't think even across the market, what's happening with the RBA will permeate across to other US dollar crosses. And this is what I say about the RBA being sort of the smaller mover of the three in that regard. However, the China data coming out, that could be something that impacts because China, although batteries on this, so hopefully if I lose this, well, we'll be cutting batteries low on the headphones. So if I lose this, then cut the thing a little bit short. But regardless, look, the yuan is big enough and impactful enough to permeate across the market. So should we see exceptional numbers, regardless of whether they're up or down, that could be something that affects US dollar across the market. And then if it affects US dollar across the market, that could in turn affect Aussie. So I think China's probably the more sort of broad bit of data for the session to be keeping an eye on, unless you're trading Aussie directly, and then in which the CPI might be something that sort of moves it a little bit more. Speaking of Aussie, because we do have CPI coming on, we did see it test into this little level up over here. It got smacked on the nose straight away, like very, very quickly. Like it did not spend any time up in here. So this is a big resistance area that we've been looking at. I mean, if we put it back on like a higher time frame, we can look way back here, up into this zone that we've marked out here. So this is the thing is that with these things, you've seen it buyers, they became very heavy sellers through this zone here. So it's no surprise that once it got in here, we found sellers there again. And this is what I mean about these sort of chop areas. So when you've got like levels here, even we had this little level here that provided a little bit of a sell down here, these areas, because they were so heavily sort of like controlling here, like market was holding it, no, bang. And they got out and they had another shot, they got out, and then bang, that's what led to this whole lower kind of sort of consolidation down in these sort of super low 60s, high 50s. So yeah, first shot up into it, it's no doubt that sort of people are going to sell down into it there. But the fact is that even with this bit of data coming out, so it was a bit of data. What was the mover there yesterday? I'm having a mental blank. Regardless of it all, the big move that it spiked up here, it got absolutely slammed. And I put a post up and I said, like, as it was up in this area here, when it was around here, I said, look, this is the make or break for Aussie in this particular moment, because the thing is with breakouts, and this is a big breakout because sort of look at all the highs that we had through here, this green line there, that's sort of 64.38, 64.40, whatever. That was a big line that, sellers have been holding, sellers been holding, sellers been holding. That was the time, bang, breakout. If you want to get a breakout, you need to hold it, obviously. But the thing is, you don't, like when you test this zone here, you're either breaking out or you're going back. It's all very well to sort of just go and dribble along sideways, do all this kind of stuff here. But the second that you break out, and I put a post on X at the time and I said, look, Aussie's showing its hand here because you've broken out now. You need to run with it. And if you don't, you get smacked. And that's what we saw. It got absolutely hammered. I mean, we're looking at from high to low there, 1%, 73 points, which, given how much things have been moving the last couple of weeks, it could be sort of forgiven for sort of thinking, oh, that's not too bad, 73 points. Aussie traditionally as a mover, that is a big move. 70 points. We've just been sort of like blown away by like sort of 4 or 5% recoveries in short periods of time. But, that's a big smack on the nose. A 1% from a breakout attempt. You got to remember, people buying it, buying it. Here we go. We've broken out. This is the highest high we've had since going back to start of December. That should be bullish. Bang, here we go, and it got slammed. So the fact that it touched in here and then got hammered, that certainly puts it on notice to get smacked even further. Now, there's two parts to these moves when you want to use them for big reversals. And basically, it's sort of like, this is the first part. Obviously, you need the rejection, but then you need the lower low. So in terms of a sort of small time frame, yeah, you got touch in here, retest, and then bang, okay, it got smacked. What it really needs to do, if you want to see Aussie really come down, you got to see the attempt higher and then the push out the other side. Because sort of like, a fake breakout is, I'd say this, a fake breakout is as good as a breakout, just in the opposite direction. And that's a good trade back down here, 70 points. We have sort of seen the buyers sort of step in on a lower time frame where they had been previously. Obviously, we had it marked out and just touched into it, and boom, they came down. So you got a couple of levels that's got to get through, but really, main one is down here, low 63s. I think if Aussie, it's had a lot of attempts up here. It's still in the game. Look at in the scheme of this bounce move. We haven't even really come close to the 23%. We're not anywhere near that at all now. But under the 23%, I think it could move down a little bit more. And 61.50, I said 62 because I thought it would have come down a bit quicker with this rounded top, yada, yada. If this breaks through here, the fact that it's been up here for so long, I think feeds the idea that the correction could be deeper. You know what I mean? It's sort of like if it's a quick touch up and then it goes back down, well, you haven't had time to build up liquidity. You haven't had time to build up stops. But there's a lot of people that are going, yep, this is where it is, this is where it is. So this is where you probably find a lot of sort of stops sitting down in this area here. So should we break down underneath here, I think you're going to see that at least this move will come down here to low 62s. That's 100 points or so to the bottom side there. But the thing is, I think that'll move quite quickly. I think this will hit stops and then stops. You got a lot of little choppy areas up along here where you could say, hey, look, market could rally. That's fine. But I think they'll just be speed humps as they were through here. Like it just sort of stopped at pushback, stopped at pushback. I think if you commit to the downside here, I think at least 62 would be sort of an area where you sort of look for any sort of potential stop. And even that in the scheme of things is really only not even to the 50%. So it's between the 38 and the 50. Aussie doesn't mind a deep pullback. 61% aren't sort of unheard of. That takes you right back down to 61 cents. So yeah, I think sort of certainly if you get through this area here at 63 cents, one to 200 points, I would say is probably an area that we're sort of looking to sort of come back down to the lower side here. That'll be a nice little one to sort of revisit in a couple of weeks should this sort of play out. But yeah, sort of in the short term, you can see obviously it's just consolidating at the lows of the pullback. The levels we're looking at in the short term are 33.70, 470s, 63, 46. So 74, 60, 74, 45 under there. Then you're looking at really big tests down into these levels down here as well. And as I said, I think this is more sort of predicated on what happens with the US dollar. I don't think sort of the RBA having a slightly hot print is necessarily going to be enough to stop DXY or stop US dollar overrunning Aussie. As I said, I think it's a kind of a pullback on it all. So we've got a little chart of it all. RBA coming in. Look, it is tipped to be a little bit cooling on the headline. China. So how is China? I think China actually broke down yesterday. did have a little bit of a breakdown, so that's actually a little bit of a positive. So stronger one, but we got the data coming out today as well, which looks a bit weak. So this is I mean, this is a very rough, raw sort of thing of it all. But US dollar potentially breaking out is giving you this. Again, this is why we're chopping up and down, up and down, up and down. Not only are these giving us three different signals, potential signals, but they're changing every day. You know, we're getting sort of RBA is looking for to potentially cut. That's all the talk. It's supposedly priced in. If it's cutting and it's priced in and it's up here, well, that's actually quite bullish for it because obviously, you know, if they're pricing it in, that's putting a handbrake on things. Um, so, you know, you've got a sort of slightly negative sort of push on from the RBA. The yuan's strengthening up a little bit. That's positive. But then the data coming out would be a little bit more negative. So again, look, as it is at the moment, the yuan's strengthening. So it's a positive here. And US dollar is fighting off its lows. Like it is at its lows, but it does seem to be quite resilient at these lows. Hence, I think that could be pushing. Getting battery warnings still on these things. Just got to keep an eye there so I'm not just talking to myself. So look, this is why Aussie's up and down here because these things are all giving us different signals. They're the main drivers, but at the same time, they're swapping every day as well. So till we get these three things pointing down or these three things pointing up, I think we're just really going to keep chopping through here. We've got our major levels now, that little 64.50 and 63.20. I think they're your kind of breakout levels. So let's just put one of these up over here and say there or there is kind of where we're looking for Aussie. In the middle here, as you can see, as ugly as it is, it's just complete chop. All right, let's fly along because my battery might die at some point. So we've got gold, and talking about chop, here we go as well. So we know where the buyers are sitting down here. You can see them slightly, if we build this out now here, you can see this lines up pretty well for a little bit of a sort of increase here. So we are seeing them attempt to sort of like, you know, push the bid up a little bit, but really still in just this consolidation. 33.80, that's still your breakout to the top side. Below 32.60, that's where we're looking for potential a little bit of a push down. Now, it is still in a consolidation, so it is mainly sideways. We are seeing the buyers push up here a little bit, but it's not flying. It did fly through this part, but as you can see, sellers came in pretty quickly on this as well. So, you know, again, it's a tough call, but this is what I was saying yesterday with the video. Like, you know, with all these things consolidating and waiting on these bits of data and news and some sort of actual confirmations and drivers, well, you know, you just sell the edges. And this is what I was saying. Like, you know, if it gets up here, short it. If it gets down here, buy it. And once it breaks these, well, you know, then adjust your positions accordingly. But if you're selling it or shorting it from up here, you've got little risk as it moves if it pops out here. If it does come down here, well, you've got a nice little comfortable little buffer area. Likewise, if you're buying it down here and it goes down underneath there, well, you know, minimal risk. So we could sort of, you know, play that kind of area a little bit more. But really, as much as sort of you want to say, hey, look, it's breaking out, well, it's doing anything. It's not really doing anything. It's very hard. Like these kind of triangle consolidations typically favor the direction that it was entered into. So if we see it coming down this way, consolidation, that is from a very broad sort of technical point of view, the expectation you'd sort of say, well, it's not necessarily the expectation, but it's the higher likelihood for consolidation breaks is to continue the direction in which it entered into, which obviously would be giving us that push down and along to that sort of 31.60 you've been looking and talking about, So, you know, nothing really to give away at the moment. It is super tight. Well, it's actually very tightening up, particularly overnight. These breaks, I think, will be quite good because, again, same with the other ones. Look, you're going to get a bunch of stops sitting here and you're going to get a bunch of stops sitting here. And that's what's going to feed this move and feed this move. The longer that it's in the consolidation, you've got shorts that are like, yep, cool, bang, I'll put my stops above the highs. Oh, no, here we go. This is just a big sort of swing pullback to continuation up over here. So really, we need to hear a bit more from sort of China and the US in terms of the tariff stuff, because that is, remember, what was the main driver to get it all the way up here. I mean, look, it was super bullish prior to it all, but it went stupid accelerated from that period there. So if you stand back and zoom out a little bit, yeah, it's pulled back. It could very easily push back up here, put in a double top. I don't know if it's really sort of setting it up for, okay, a breakout to go higher, but, it has been super bullish. So, but again, I'm still looking for probably a bit of a retest of these highs at 31.60 at least. If you break underneath that, you are going back, I would say, in a larger sort of test sub 3,000. So underneath 31.60, I think you probably got another $200 moving down there. Should you get a break down under there? But as I said, deal with these things level by level. So we've got to get through. We've got to get out of this consolidation first. You got to break these lows here. You got to see what happens, because you will get a reaction here, regardless of it all. You will get a reaction. It's just a matter of sort of, do you get a pushback up here, and then sort of like market goes, yep, and pushes it down like that. I think that's probably a better way to push this, to sort of show this on the chart, because you will get a reaction here. You will get people buying this thing up, closing shorts, whatever. You will get a reaction there. Does it come back up here and test this zone? Come back up here, test this other thing. We'll deal with this when we get to it, of course. But this is very highly likely that you could sort of get a move like this. This could be quite a strong bullish thing, and this move here could come further back up. I mean, look, anything's possible. That's the whole point of technical analysis. You're not moving the market. You're just sort of reading what the bigger guys are doing. But a course of action is very much this kind of thing down here. So I think the sort of the chances of it moving up to the top obviously are still prevalent and there, and it's just in the middle of this range at the moment. So you can't really sort of give it one way or the other. But I think sort of it's about being prepared and planning for these things. And certainly 31.60 is your first target. A second tap into 31.60 after a bounce will give it a bit more juice, and that's when you could potentially get down under 3,000. That's obviously a fair way off now, $400 or so, $300, $350. But it is, if it's ever going to get to that point, that's the course of action that you're going to see coming into it, basically. So that's a bigger picture. What we can do with this session is go under 3,300, where we saw buys hold it last night, takes it out of this little triangle. That'll give you a sort of test back down to probably, I would say, more sort of like 3270s underneath here. So let's get right into this now and sort of say that you got a little zone through here. You do have a bit of a sort of level through here, but it kind of really seemed to disregard this a fair bit. So I'm going to zoom this back a little bit. And I'm going to say that underneath here, this is what we're looking for. Move down here. We're going to somehow distinguish these between sort of larger timeframes and lower timeframes and higher timeframes. But yeah, what I'm looking for is a break underneath 3,300. Put a little alert there. Okay, boom. And then we're going to be targeting body fill down here, 74. That's for the body fill. That's something a bit more actionable on today's session. And as you can see, tried to move up here, bang, sold back down there. Top side wise, you can see that there's a little bit of a zone moving through here. I think if it gets above sort of 36, you could see a little bit of a push back up towards 64. So, but look, I'm looking for the downside, so I'm just going to leave that there. All right, move along. We've got silver. Silver's actually been holding up a lot better than gold. But as you can see, it is respecting this sort of underside very well here. It had a little bit of a rally up here into what 33.50 it got up to. Obviously smacked on the nose afterwards. But I think it's safe to say that this is a line that the market is looking at because it was support, 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 broke through, and now it's resistance, 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 resistance. So I think still you're looking at 32, 32.80. Well, realistically 32.65, but this sort of solid line down underneath here is one that we've seen. And this is, as I said, a very typical sort of thing with silver, not quite to the extent of this. But when you see these kind of moves on silver, it doesn't mind sort of like going a bit high, bit high, bit high, bit high, bit high. So I really think that should we break 32, 32.60, 32.65 to be precise, down, 32 is definitely an area where you're going to see a touch up and then see what the market does here. But this is juicing the market a lot here. It's early positions going higher, take them out, take them out, take them out. The bounces are getting higher, but you've got a solid straight line. So this to me sort of says that should this thing go, it's going to blow and go bang down here. So I'm looking for a fast move underneath 60. Minimum sort of like 40, 50 points, which in the scheme of things isn't massive, half a buck or so, but certainly enough that is a very intersection sort of tradable thing. But given how much the action there has been here, I'd imagine it to be somewhat short-lived. I don't think we're going to get a $2 meltdown. But we'll see how we go. Should we break through this area? So something to this effect. I move down here, bounce up, second tap. That's when we go through. That's my sort of feeling. Cool. Fly along. We've got copper. And so copper, this is hanging in there. Certainly, it's funny because we had the breakout here yesterday, and this is what I was saying. Like looking at this is on the 1 hour. This little RSI, I was like, oh yeah, we'll see this break. Well, it broke up here without the RSI, so I got swiftly sold into. This horizontal held a lot better than anything this RSI was telling us, and then it decided to run up here. So it was like a fake breakout, or breakdown, sorry, and then boom, up into this area. But this is the area in which we were saying, regardless of how it got there, that's where we were saying that if should it come up into here, it's going to get sold into, and that's what we saw. And this is the thing that I'm saying at the moment that while you're sort of waiting on these large bits of data, you're waiting to see what's happening with the US dollar. You're not. Is this the time that you're going to get the breakout? Probably not. And that's what we're seeing. It attempts and it gets sold into. So this is really just the range that you're still playing in. Keep it above 479 to keep it in the game. And as if it comes up towards 497, gets smacked on the nose. So we have seen break of the trend, and then it's dragged up higher, higher. This initial drop, dragged up higher, higher, right up to the top, and then bang. So again, look, if we see this come up to the top, well, sorry, we have seen it come up to the top. If we see the two parts to these trades, so it moves up, sold into. If this comes out the bottom here, I would say this is going to be our medium-term top. So this is the level. This is the time that we see a bigger move. Medium-term reversal. So always luck of the draw is like, have I got any alerts left on this thing? So that's very much what I'm looking for, 477. And in line with things, I think gold's potentially going to come off, silver's going to come off, I think copper's going to come off, I think US dollar's going to run, I think Aussie's going to get bashed. I think that's what I'm kind of looking at, and they all kind of seem to flow together if they do, if they are going to eventuate. Look, all these things have levels where they get negated. Above 5, that's negated, and it's just consolidation, bang. And look, in the scheme of things, if you look at this as this move here, it's moved up, is consolidating at the highs, it could just be a little stutter step and then bang, and we could see massive, massive highs. But I think that this is really, if we zoom it out, I think this is really the third leg that we need to get. Move down, found support, move up, find resistance. I think this leg needs to come. Now, whether this leg comes all the way back down here or more likely comes to the 61% and then we see a move like that, I think that's probably more plausible. So I'm not looking to sort of, get copper and, short it to oblivion. But I think that certainly, it's a better long prospect around 440. So let's put some buys in here. Excuse me. Not buyers. So buys. Buy zone. That's more of a attractive looking area, and I think that's a very plausible move down to the bottom side there. This also is 10% down from here, which sounds a lot, but you got to take these things in context of what we have been seeing. Whoops. More recently, which was a 25%. Look, it was a 30% gain, 25% drop off, and then what's this one here? This bounce here, 20% bounce. You know what I mean? Like this thing is realistically flying around. So the idea that it comes back 10%, albeit it's like, wow, that's a big pullback. It's not like, wow, you're not looking for the Hail Mary of trades that have never been done or we haven't seen recently. So I think it's very much a likelihood that we could, should this break this level at the top up here, break the consolidation, come down 440. I think that looks like a better buy area down here than buying it here to try and squeeze out a couple of points up to the top over here. I'm surprised it didn't close the gap. That's something to keep in mind. But yeah, we'll see how this one sort of plays out. But at the moment, I think it does look like it wants to sort of push back down there a little bit. All right, and finally finish off with China. Bit of a long one actually. We're at 47 minutes on that just for the daily. So broke out of its little consolidation grind. We can see that the seller's actually moving down on a little bit of an angle here. So what we can do with this is use this as a potential level A to give us a little bit of a channel, which it seems to be now respecting. Buyers stepped in pretty well underneath that lower line, came in line pretty much with this horizontal as well. We can use it as a potential thing when if we are going to see any sort of recovery. And we can also say, look, not that it's about to capitulate down out underneath this, but you could expect this potentially to now rally up like this and then look for some sort of continuation. But I would say the fact that it's broken down, it's found its new support, again, same sort of thing always. Breaks down, find support. It's got to come up, find resistance. Resistance probably at a level where it found support previously, and then moves back down there. It's the same thing. Every price, every asset, every instrument, asset, whatever, every time frame. It's the same thing. It's just you've got to be able to determine what leg you're in. China's a little bit tougher because it's such a controlled currency and it's very sideways chop. But essentially, it's still the same with what buyers and sellers are doing. All right, cool. That's pretty much it for me.